While the world is busy chasing meme coins, viral IPOs, and TikTok-fueled market noise, a silent giant is positioning itself, deliberately and methodically, for one of the biggest power moves in tech. That company is Alphabet Inc., the parent of Google. And heading into 2025, it may very well be the most overlooked, underpriced juggernaut in the entire stock market. A $2 trillion behemoth with cash on hand, deep infrastructure, and a roadmap that doesn't just follow trends, it builds them. Alphabet doesn't just exist in your life, it defines it. From Google Search and YouTube to Gmail, Maps, Android, and Chrome, this company doesn't run apps, it runs ecosystems. These aren't just tools, they are foundational platforms, quietly printing revenue in the background of nearly every digital interaction on Earth. And yet, despite that dominance, Alphabet is still trading like a second-tier tech play, moderately valued, under-discussed, and hiding in plain sight. In 2024, Alphabet pulled in over $350 billion in revenue. That figure alone is staggering, but the rate of growth is what truly separates it. We're talking about nearly 14% year-over-year revenue expansion from a company already operating at massive scale. But the real value isn't just in what Alphabet has been, it's in what it's becoming. The three technological frontiers that will define the next decade are artificial intelligence, cloud infrastructure, and autonomous vehicles. Alphabet is not just involved in all three, it's leading them. Start with Google Cloud. Once a distant third behind AWS and Azure, Google Cloud has turned the corner. It is now profitable, scaling fast, and becoming embedded in the digital backbone of enterprise. Whether it's AI processing, cybersecurity, or collaboration tools, companies aren't just choosing Google Cloud, they're sticking with it. That's the trait every long-term investor dreams about. Artificial intelligence, meanwhile, isn't just a buzzword at Alphabet. It's already the engine powering nearly everything it touches. YouTube's algorithm? AI. Search rankings? AI. Business tools through Google Cloud? AI again. But here's where it gets serious. Alphabet doesn't just use AI. Core models, training infrastructure, tools, APIs, the stack is in-house, integrated, and miles ahead of most competitors. Analysts across Seeking Alpha, Zacks, and others have identified AI as Alphabet's most powerful growth lever going forward. And earlier this year, when the Department of Justice floated the idea of forcing Alphabet to spin off its AI division, the industry held its breath. But the proposal was shelved. No regulatory breakup, no forced slowdown. Alphabet now has a clear runway to scale its AI operations without resistance, and the market hasn't fully priced that in. Then there's Waymo, Alphabet's autonomous driving division. While other companies in the space have pulled back, hit walls, or burned capital with nothing to show, Waymo is expanding. It's already operational in select cities and has announced plans to launch robo-taxi services in Washington, D.C. by 2026. And if Waymo even modestly succeeds, Alphabet secures a first-mover advantage in a trillion-dollar transformation of transportation. The most stunning part of this entire story is the valuation. Alphabet is growing like a next-gen tech disruptor, but it's priced like a mature, slow-growth stalwart. Its price-to-earnings ratio? Around 20.8. Compare that to Microsoft at over 32, Amazon near 38, and Meta in the high 20s. Alphabet is delivering similar, or in some cases better growth than these companies, but trading at a discount. Earnings per share climbed nearly 39% in 2024, landing at $8.04. That's an elite level of performance for a company of this size. Most large-cap companies struggle to break single-digit EPS growth. Alphabet nearly quadrupled that, and the momentum isn't slowing down. Analysts expect steady earnings growth between 10 and 12% annually over the next several years. This is how wealth is built, not through short-term hype, but through compounding performance backed by infrastructure, not narrative. Of course, there are risks. Alphabet is still under the microscope from global regulators. The Indian Competition Commission continues to investigate its App Store model, and U.S. antitrust authorities are watching closely. But even under pressure, Alphabet has remained resilient. The stock briefly dipped below its 50 and 200-day moving averages earlier this year, but long-term momentum has returned. And most of those regulatory concerns? They've already been priced in. Alphabet has survived worse. It adapts, it innovates, and it keeps building. Zooming out, the full picture is impossible to ignore. Alphabet is a global digital empire with massive, diversified revenue streams, from advertising and cloud to AI and mobility. It is growing faster than nearly every other mega cap. It is priced cheaper than all of them. And its strategic focus is locked in on the very technologies that will define the next wave of innovation. Now, none of this is financial advice. You should always do your own research, run your own numbers, and make decisions based on your own strategy, not someone else's conviction. But if this gave you something to think about, if you're seeing Alphabet differently now, then hit the like button. It helps signal to the algorithm that content like this still matters. And if you want more deep dives, more substance, more long-term strategy, and less hype, make sure you subscribe. Because this isn't just commentary. This is execution. This is strategy. And this might be your front row seat to the next major tech run. Catch you in the next one.